what do we want to talk about now? In the final section of this third part, we want to talk about market provisioning. And I'm very excited about this because then we get to talk about other issues, or more the platform upon which all of these different startups are basing their business models. Wow. Let's get into it. Where are we? We're basically at the 9 o'clock stage of the World Economic Forum model. And we're going to talk about these new market platforms. So let's get into this final section of this third part, shall we? There we have. This is where we are. Get your notepad out. Focus. Not long to go. Here is the blockchain startup landscape. Now, why do we mention blockchain? Because blockchain is a major disruptive technology that is allowing new marketplaces to evolve and come to fruition. And we don't have time to cover everything here, but just be aware that there's a little bit of what we've covered in the other sections in here already, especially in the area of payments, in the area of data analytics, the area of wallets, data provenance. There's a bit of everything in here that's we've covered in the first two parts of this lecture series. But what is blockchain and how critical is it a technology? Well, Q4 funding to blockchain companies declines year over year, but that's only in the last 2019, but declining from 1.4 billion down to 1 billion or 800 million. It's still huge sums for each quarter. So still a lot of money going into blockchain. All right, first I want to talk about is consensus protocols. Now, this is not a technical lesson, but I just want to make you aware of the different types of protocols that are out there. You've already been introduced to Bitcoin. In some ways, that is a public consensus protocol. In other words, anyone can become a node in the Bitcoin network. You can turn your computer into a mining node anytime you wish. You are open, you are free to get involved. Or we could go to a completely permissioned, like Ripple, where they decide who are the nodes in the consensus network. Okay, let's go into a little bit more detail. What are we talking about here? Well, we're talking about the traditional banking is right at the bottom. That's where the middleman is. But if we go halfway up, then that's where we have Ripple. Ripple was a startup that is providing a permissioned consensus protocol to enable the transfer of information and value between banks and their customers. Then we could go to the extreme form of disintermediation, where we don't have that middle person, the bank, but we have Bitcoin, where the consensus network is completely public. That's the comparisons that we are looking at here. And so we could look at a complete open public consensus framework, like we're talking about distributed ledger technology, and the notion is that we are sharing spreadsheets among nodes in the network for those nodes to agree on what is the correct content of a spreadsheet. And here is a basic consensus network. It may be public, but we could go to a more private one where the ledgers are shared between different roles who have different permissions to make decisions about the content of a particular spreadsheet, or in this case, a particular ledger that is in the blockchain. But is there some other way of summarizing the differences here? And this is probably the best way to simplify what we're talking about. At the one extreme, on your right, you have Bitcoin. Yeah, we love our little Bitcoin. And that is a single-use blockchain. That is, the blockchain is used for the single purpose of recording and storing forever various transactions that have been agreed to in the consensus network. It is a public blockchain. That means anyone can join the network. We can go right through to Ethereum, which is also a public blockchain, but it is multi-use. Not only does it have Ether as its cryptocurrency, but it also is being prepared to be used for smart contracts and to enable the exchange of information and value. Then we can go to Ripple, which becomes a private blockchain network. So they choose who is in and who is out. And they are working with banks for this purpose, to enable banks to revolutionize their public offerings in face of challenges and competition from fintech startups. And we can go to the final extreme, and you all knew about this at the middle of last year when this little company called Facebook announced, oh, we have got Libra. Yay! Libra is going to be the solution to all our multi-currency payments problems of the world. Well, yes and no. We are still debating about that. Governments and regulators around the world are debating about what is the implications of Libra for a particular country's monetary system. When people come into the country and they start using Libra, which a majority of the currencies are outside of the country's currency, and suddenly people are making domestic transactions in foreign exchange. And governments around the world are questioning this model, and whether the model will survive as it is or will it evolve, who knows, but it's something you need to be aware of. It is a private blockchain focused on payments, and the network is a selected consortium that is involved in consensus and decision making. So that's the best way I could dismantle and compare the different types of consensus protocols out there. And of course, we could go into a little bit more detail as this table shows. At one end, we've got public blockchain, a little bit more information here. And at the other end, we have the consortium blockchain like Libra, and a little bit more information at this end here. Okay, enough on consensus protocols. I think by now you get this sense that, okay, Bitcoin is not just the only blockchain out there. Blockchain can be used for other purposes. So let's briefly have a look at some of the other purposes that blockchains can be used for. A, clearing and settlement. And so blockchain can be used in matching the trading, settlement, and the exchange of money and information between two traders in a market system, the buy side and the sell side. Problem here, there's a lot of players and there's a lot of transactions, and it's possible that blockchain can become a stronger way of securing the exchange of information and the transfer of value between buyers and sellers in a market. And so the use of distributed ledger technology comes in handy here. The blockchain, it doesn't have to be a public blockchain. Again, it can be a consortium or a private blockchain that is involved in clearing and settlement. And some stock markets around the world are experimenting with bringing this technology in to help manage the clearing and settlement system of the market. Our next use case is real estate, and I may tell you, real estate is a big deal. It is a big deal because it represents a huge transaction value around the world, and also each transaction is very, very, very large. It's not like you're going down to the supermarket and buying your groceries each week. You don't go and buy a house each week like that, do you? It's a once in a lifetime for many people. And when you do that, blockchain can help in many different ways. It can help in terms of recording the escrow, recording the transfer of the title, recording the transfer of the money, and matching it all up to make sure that the transaction flows smoothly. Is there a problem with that? Could be. Some countries are experimenting with using the blockchain to replace title offices. What do we mean by that? Well, traditionally, when you go and buy a property, you go to a lawyer to help do the conveyancing and execute the property transaction. What the lawyers will do will go to the title office to make sure that you have the title to the property you are selling and there are no liens on that title. That is, there is no claims by banks or lending institutions on the title of your property. Right? This is all the information that the lawyers have to get information on. So this is where blockchain can help and actually streamline that search process. But beware. Real estate isn't perfect. In Australia, there's a story about this MasterChef finalists. Some of you watch MasterChef. Now and again, I just watch the adverts. I don't watch it religiously. Okay. I don't mind cooking, but let's get on to this. Anyway, so the finalists, they actually lost half of their $250,000 sale of their house. They sold their house and they went through an online system that the state government has been planning to set up and use, but the online system is already in use as a conveyancing system, and someone, a hacker, got in and stole half that money before that money was transferred to the accounts of the property owner. Now, they're able to recover half of it, but these are real stories of problems in implementing blockchain technology to make sure that real estate transactions are executed smoothly. Things are not as smooth as it would seem, as the technology would say. Keep in mind, be careful. Sometimes lawyers, actually for now, lawyers are your still safe bet for the transfer of property. Okay, related to real estate transactions is title insurance, because when lenders are processing loans, the process remains highly manual and antiquated, and usually the title insurer covers the policy and the home buyer while the loan is being processed. And so as part of the title insurance, we need to be able to search for the security interests associated with the property that you are selling, with the property that you are pledging to the bank to get a loan on. So as I said, real estate, following on for that, title insurance is related to that, and the security interests associated with the title. But security interest is even more, not just with real estate property, but also with other types of securities. And security interest could be in terms of art, it could be in terms of equities, it could be in terms of other types of assets out there. Anything that can be secured by a financial institution, then blockchain technology can be used to help in the recording of security interests for a date when you want to sell that interest. Then the buyer needs to find evidence that you are the owner of that security interest. The blockchain technology can help fast track and coordinate that search process. So there you have it. There's some use cases. But that's not all. Another use case for blockchain is trade finance, and that is a huge area. As I mentioned earlier, B2B payments is in the trillions of dollars in the supply chain. This is a lot of money. And here's an example, a great overview of trade finance relating to making sure there's visibility of the supply of goods that is being tracked, making sure there's verification of the ownership of the goods, the content of the goods, the quality of the goods, and also ensuring value transfer of the goods. Those three steps are ripe for the picking when it comes to the use of blockchain. And that's all I'm going to talk about it here. But just remember, trade finance is a huge disruptive area for the use of blockchain technology. Okay, just summarizing this area, there are other use cases, and while there's a lot written down here, I'll draw your attention to the 12 o'clock, the 3 o'clock, the 6 o'clock, and the 9 o'clock. So at the 12 o'clock, you have proof of ownership. At the 3 o'clock, you have digitizing assets. At the 6 o'clock, you have smart contracts. And at the 9 o'clock, you have digitization of documents. Interesting. That's a nice summary. We can go into that in more detail in a particular weeks as you care. But for now, we want to take you to the next interesting part, which is basically the 6 o'clock part of this diagram, and that is smart contracts. Smart contracts are, remember, you have one lock, someone else has another lock, and the only way you can open this safe is if the two people come together and open at the same time. That's a self-enforcing contract. Nick Slavo, however, back in early 90s, came up with this article which talked about smart contracts. Basically, smart contracts are self-enforcing contracts. They don't require a middleman. They don't require a third party. And let's give an example of what they're about. The best example is a vending machine. A vending machine? How does that work? Well, the vending machine will take action only when you put in the coins, only when you put in your credit card, only when you swipe your card. And then the screw will go around and out will come your candy, out will come your drink. That's the best example of a smart contract. It's self-enforcing. There are other examples of smart contracts where workers scan IDs which are verified by a government database and then work begins. Or when finished products automatically summon delivery trucks. Or when a driver scans a box, it triggers a payment from a video game company to the factory. These are all different types or examples of smart contracts. Or what about the repo man? You heard of the repo man? Well, get this. How many of you drive a car? And I used to drive a car in another country, 2 countries now, Australia and Hong Kong. Yes, you can drive in Hong Kong. Not for long, 8,000 kilometres in 2 years, not very far, not much. But people drive cars in Hong Kong. Anyway, what does smart contracts have to do with cars? Well, what they're doing now is if you buy a car and you buy it on a loan, then maybe a condition of the loan is that there is a smart automation device in your car that will turn the car off when you miss a loan payment. And so it's self-enforcing. Loan payment comes in, and this automated device in your car allows the electrical system to continue to work. But when you fail to make a loan payment on time, then the electrical system will cut out and you can't drive anymore. Oh, I better pay my loan as soon as possible. And then it's self-enforcing. In other words, there's no person that you have to ring up to change what's going on. You just have to pay the loan, and then it opens up the electrical signals in your car. That's a self-enforcing contract. Wow. And they're in process in cars in some countries today. So your car won't start. Did you make the loan payment? And this was 5 years ago, and that's happening now on cars that you buy totally for a loan in some countries. Not in all countries, but that's a smart contract. What's another example? Another example could be a smart contract in finance. We talk about a special purpose vehicle. So what is a special purpose vehicle? A special purpose vehicle is when you can marshal your fence around the risk of some transaction by creating a company. So creating a company puts a legal boundary around that transaction that is inside the company. And so the legal boundary becomes the special purpose vehicle, and you use it to protect the risk associated with a transaction. Wow. Do companies use this? Yes, they do, for particular transactions that they seem to be very risky, and if it fails, they don't want that risk to contaminate the ordinary operations of the company. So special purpose vehicles can be used as a smart contract. So we get to the end of market platforms where we talked about consensus protocols, that is from completely public like Bitcoin to private like Libra or Ripple. And then we looked at blockchain use cases, not Bitcoin use cases, blockchain use cases like real estate, title insurance, security interests, and trade finance. We also looked at smart contracts briefly, and the best example is the vending machine. So that finishes our 6 clusters of financial services innovation. That's it. That's the World Economic Forum model. And the purpose of me going through these 3 parts is not to drown you with information, not to drown you, but just to show you as you go through this unit, and in 1 week you might look at deposits and lending, you can come back to look at the different examples that I talked about. In another week you look at investment management, you can come back and look at the different examples, so you know where you are in any particular week of the semester. My job is to help you with an overview, and then you can go into the rabbit holes of the particular areas during the FinTech unit. And if you have any questions, please contact me. So happy to help and to give you this overview of the World Economic Forum framework. This is O'Connor, and welcome to FinTech. This is a new area, and this is going to create new employment opportunities for you. So lap it up, taste it, digest it, and enjoy the process of learning FinTech. Thank you, and catch you in another video. Bye for now.